Well, the lower oil price environment may come. First, we have the political risk at hand, which is going to be overshadowing everything. It's very difficult to see what is more, the additional supply coming from OPEC or the reduction in supply from Venezuela and Iran. So I don't see really that playing out in the next half a year. We're going into the high demand season in the summer. So that's not the timing right now to expect prices to come down. The prices may come down thereafter once this political risk also that Bill Ackman has said, well, it's going to be resolved this or that way. Well, let's assume, that what is left after all this political risk is the trade war with China, and everything looks grim, and oversupply is manifesting. You know how OPEC works? It basically is taking then what's on the table, and then they make cuts. So Saudi is also positioning for what may happen afterwards. Because if oil prices drop to $40, they eventually will sit on the table and everyone will compare notes and they say, okay, how much are you producing, what you're producing? And then they will take cuts from where they are. So when they're increasing right now, it means they're positioning already for the time after the next meeting when they have to cut.
Johannes, let me pick up on something you just mentioned there. If this US-China trade fight gets worse, do you really think we could see oil fall back to 40 USD?
Well, look, China enjoys it so much right now. I mean, they love it. They are waiting. They say, well, Trump, you started that. Show us how you want to end it, And they have to do nothing. And Trump is going to, have an awful time, because if China doesn't respond to him, China is run by a dictatorship, right? So for them, it's easy to control. Trump, he will lose a lot. Yeah. So right now they will, he will beg them to come to the negotiating table. And if not, it's all about supremacy. Trump wants to have supremacy and China doesn't want to be subordinate. So at the end of the day, of course, they will find a channel of diplomacy. But if not, and you don't know how the ego of these guys is going to play out, if not, we will have a meltdown and oil easily can go to $40. No doubt about that.
It's interesting because so much of the conversation in the oil market right now is shaped around the demand side as well. Clearly, OPEC adding barrels to the market seems to suggest that they perhaps are a little more optimistic on the demand trajectory than almost everyone else. And of course, the real risk here is that if we do see this trade fight between the US and China escalating and other geopolitical risk factors also ramping up, like recession headwinds, for example, as a result of this trade and tariff war, then demand could be significantly impacted. So, Johannes, where do you sit on demand right now? What is the demand trajectory from your perspective?
Well, demand is not great if you look on Europe and then the US. I mean, in Asia, it's much more robust. So the Asian economies are growing reasonably well. Demand growth this year is maybe not going to top the 1 million. Probably it's going to be below that. But still, there is oil demand growth if you assume a normal trajectory. But if you add all this trade war, and if it doesn't end soon, you will not see any oil demand growth this year, and that may be very bitter, But right now, the impact of the Trump sanctions, especially the secondary sanctions, they're the atomic bomb in trade. If that really comes through, then OPEC can increase because on the other side there will be a decline from Iran and Venezuela.